Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, June 23rd, 6:40 p.m. Eastern Time. What took so long, Don? Well, there's a nationwide outage for GoToMeeting, which is our video recording software platform that we use. May have to revisit that. It's pretty reliable normally, but not today. So yeah, this is the big show, the Friday edition, the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at what's important for next week, and update the world famous 21 over 21 leaders list. Let's fly through this. So state of the market, we're in an uptrend. You can see over here showing four green arrows. That's for market leadership and the three time frames that we track the five major indexes across. First, chink in the armor for this uptrend, the Dow, the IWM small cap index, and the MDY mid cap index all closed below their 21-day moving average. They've been the weakest really all year. Uh, Tech has obviously led the NASDAQ 100, and it's a huge component of the S&P 500. So uh, S&P and NASDAQ 100 have been rallying this year. In fact, we're still extended that we're keeping the stop sign up on the NASDAQ 100, but we have pulled back this week to a more reasonable level of extension. Do we have further to go on the downside? Well, the breadth that we had been seeking with mid caps and small caps certainly didn't participate this week. As far as what just happened, we had a pullback today. We had all 11 of the spider sectors down today. They were all down for the week. All five of the major indexes were down today. They were also down for the week. All eight of the RG8 were down today, and they were also down for the week. The only standouts that I could find this week was ITB. That's a home builder ETF. XHB was probably positive as well. And bonds were up for the week. So we'll dive into all of this in the video, but here are the numbers for now. RG8 down 1.25%. S&P, we gapped down at the open. The explanation was extremely weak global PMI manufacturing data came out overnight. When I woke up, we were down. We stayed down up until the open, gap down 0.8% on the S&P, 1.1% on the NASDAQ, and 1.3% on small caps, which is pretty much about where we closed. We had an early afternoon rally. That early afternoon rally was all given up by the close to basically close where we opened. So RG8 down 1.25, S&P down 0.8, NASDAQ 100 down 1%. NASDAQ 100 was much weaker earlier. It cut the gap between it and the S&P as the day went along. Dow down 0.65, mid caps down 1.15, Russell down 1.4, global diversified 60/40 down 0.45%, in-house GROTECTION down 0.93%, mostly due to the S&P being down, and we got a little bit of alpha from uh, let's see, Celsius and from Uber, but rest of our holdings down on the day. Let's get into the charts. We'll start off here with the S&P 500, but I also want to show the weekly returns. You can see up here in the corner. So basically, you can see the last 8 weeks of what the weekly chart's doing and the weekly return for whatever the main ticker is in the main window. This will feed the other window. Let me show a little bit more of this. Show about 12 weeks, but you can see this pullback even on the S&P 500 is really quite normal. It was an inside week, meaning the high and the low of this week were inside last week's high and low. Volume lower also for the week. So yeah, it was a pullback, but we've been looking for a pullback. We're getting the pullback. When you get it, it never feels as good even when you're expecting it, believe me. But um, still not saying that major damage was done enough for us to really significantly pull back. We've still got hedges on, but no violations. There were a couple violations on the 21 over 21 list, and we sold those out, most notably AMD earlier this week. And then three others joined them. These were recent leading stocks. We'll go over them. But I mean, to take the place of those four, I easily have 40 stocks that I could put in the list. So leadership is there. It's just time for a pause. We paused today. We paused for the week. Let's move forward. NASDAQ 100, strongest of the indexes. Note again the inside week. Yeah, we closed at the range of the low of the range, down 1.46% on the week, down a percent today. Normal action. Undercut, reclaimed, closed slightly back below the ADMA, but again, an inside day for the day and also an inside week on the week. Still not concerned. Now, how extended are we? We closed last Friday. Well, actually, last Thursday was the peak, 11.6%. We pulled back on Friday, closed last Friday 10.6% above the 50-day moving average. We're now down to 7.7%. That's a combination, obviously, of the average rising and the index pulling back 1.46% on the week, and most of that was today. Today was also Russell rebalancing, so you'll see some exaggerated volume on some individual names. But here we are, still above the 21, well above the 50-day moving average, inside day on the NASDAQ 100. Now, here's where the trouble starts to begin. Here's the Dow Jones Industrial Average, broke below the 200-day, one closed below, or sorry, the 21-day, that's the green line, held the 50-day for the week, down 1.67%. Basically closing on the 10-week or even slightly below the 10-week. Nope, a little bit above the 10-week. Still not, what we'd call significant damage, but you can see from a relative strength standpoint, underperformance this week as well. S&P on the week, I didn't mention this, was down 1.4% on the week. Now let's go to the mid-cap index, MDY ETF. Four ugly down days. Tack on Friday, that's a fifth day, down 2.5% on the week. Terrible relative strength over the last 2 weeks. So this excitement and breadth that came into the market the prior 2.5 weeks, a lot of that was undone this week, but we're just about at a 50% retracement of the move off of the bottom to where we formed the top, and this handle could now form. So it's not the best news. It's not the worst news. I've seen a lot worse. We all have. But down 2.5% on the week. Really, the bottom line is that this index needs to stop going down. We need some cooperation from oils and banks, which have been absolutely hideous. Here's IWM, the small cap index, down 2.9% on the week, break below the 21. Now, this 180 area is a massive level of support. You can see back over here, we came down and broke it, tried to get back above it several times before we finally broke above that 180 level on 6/2, tested it, made a nice run off of there. Now we've pulled back all the way to the pivot. Again, this is just slightly below the 50% retracement from the bottom to this most recent rally over the last couple of weeks to the top where we put in the handle. Corrections are entitled, technical analysis, you're entitled to retrace 50% of a move without breaking the trend. So yeah, we need to very clearly stop going down here. 180 and the 200-day moving average have been strong support, that 180 level. So it's time for small caps and mid caps to start pulling their share, or we will be throwing some more out in the things in the portfolio, specifically um, the 180 is the line in the sand for this TNA long that we have on the Russell 2000 index. So those are the five major indexes. Let's go now. Let's go equal weight and see how we did on the week. So S&P 500 equal weight worse, down 2.73. That's expected when min caps and small caps are underperforming. QQEW equal weight NASDAQ 100 down 2.8% on the week. How about the dollar? What did it do this week? Dollar up 0.53% today, up 0.71% on the week, an inside week. How did that impact precious metals? I don't remember saying much positive about precious metals recently. Here's silver down 7.21% on the week, sitting on the 200-day moving average. Gold, GLD, up zero point 0.3 on the day, down 1.9% on the week. And GDX gold stocks down 0.20% on the day, down 5.1% on the week, sitting on their 40-week slash 200-day moving average. The inability to get back above this 21-day moving average has been very obvious, and every time we attempted it, it failed. Let's flip to the VIX. Despite the sell-off, the VIX only down 0.74% on the week, up 4.11% on the day. So obviously VIX up with the market being down, but market down and VIX down. VIX is not always a reflection of exactly what the market's returning. It's a reflection of the volatility of the market. And we've been saying for a while, we're below 1% on a daily ATR, average true range, on the S&P 500. So from that standpoint, the VIX is accurately reflecting what's going on from a volatility standpoint on the S&P 500. Let's flip to bonds now. Let's see, we'll go with the broad bond index, BND, up on the day, up on the week, just barely. Tight range, TLT on the week, up 1% today, up 0.7% on the week. Again, tight range, trying to break out here. Got an alert triggered. We're resetting this alert. So if TLT breaks cleanly above this declining 50-day and 200-day moving average, that means rates are falling. Long rates are falling. We really need shorter term rates to fall in sync with that, or that will make the yield curve signify recession even more than it has. But the PMI data that came out for the U.S. today showed expansion, not contraction. So the U.S. seems to be the cleanest dirty shirt right now from an economic standpoint. How about excuse me? How about yields? Here's the 30-year yield on the week, down 0.88, down 1.3% today. The TNX down 1.6% on the day, down 0.8% on the week. So let's go to the tail of the tape now. You can pause this. I'll hit the highlights. Global PMI data week. I did mention US came in slightly after the open, and it showed mild expansion. We're now down. Yesterday's update didn't trigger a bounce and a further move to the upside. We've been down 4 out of 5 days now, but still in the midst of the 15-day rally. First close below the 80 MA on the S&P, and 20th day above the 21-day moving average. Our expectations remain positive, although, as we've said with the stop signs, been there for about a week and a half. NASDAQ 100 extended, now down to 7.7% above the 50-day. So still extended. Anything over 6 is when we normally would pull out or consider pulling out the stop sign. So, but we were 11.6% last week, so it certainly is moderating as we expected. Levels, no major support breached today. No major resistance, obviously, breached either. Strength on the day. Dollar, bond prices, ITB, that's home builders, 11 out of 11 sectors down, as I mentioned. Here's our in-house portfolio. All we did in-house today was adjust some hedges, took some off, put some on. Net, the same as we were entering the day. But the bottom line for the day and the week, ugly gap down in the indexes and sectors, both pull back across the board. We're going to go to the 21 over 21 list, and then we'll wrap it up for the week. So here we go. Let's open up the 21-21 list, and first let's go through, and you can also see the weekly returns up here for these. There were only 5 of the 21 that finished positive on the week. Let's start off with what got punted out of the 21 over 21. So AMD uh, down, clearly broke the 21. Just a waterfall of selling since they wrapped up their investor day. Kind of strange with this as Nvidia maintained its strength, and those are supposedly 1A and 1B in the AI chips, but not so much for AMD, down 8.4% on the week. That was the first one punted out. The second was a very strong leader, but in the midst of the market pullback, this is pulling back too, not on massive volume, but two closes below the 21 is enough to get Palantir booted, and it is down almost 14% on the week. So maybe time for that to build a base after that big run from 10 up to 17. Number three, SMCI, also a recent leader, just barely closed below the 21 over 21. We're keeping this on our list as a re-add, down 6.4% on the week, 4.6% on the day. Tried to bounce off the 21, but just couldn't muster the strength with the broad pullback in tech going on this week. And finally, Monday, MNDY, software leader, couldn't get going once it broke above the top of this base, down 5.2% on the week, just barely closing below the 21 over 21. Another one we'll keep on the list for some possible follow-up strength, as there was very clear accumulation in this name after its earnings report, and the pullback has been on below average volume. So those are the four that came out. The next four that I'm going to go over are the four that were added to the 21 list. And we're going to start with a beaten down sector, but the strongest stock in the sector, Weatherford. Uh, Oil stocks en masse look absolutely awful, but this is one of the few that on a relative strength basis is going sideways. So it's keeping up with the S&P despite the carnage in the oil patch. And look at the earnings it has. 463 in 2023, 615 this year. PE is only 26. PEG ratio of below 1. Very clear leader, oil and gas machinery stock. If the oil patch could get something going, you can actually see that this has a cup and handle being formed here, but um, nothing to follow through due to the sector itself being just terrible. Next up, Dave and Buster's play. Gapped up on earnings, gentle pullback, had an investor day where they put up, they talked about some really strong metrics from a margin standpoint, pulled back from there just to the ADMA. Uh, People spending money on experiences has been a theme. Uh, and Dave and Buster's fits that. Eating out, entertainment. This one gives you both. So we're going to keep an eye on this one. Up 6.3% on the week. You can see the volume that came in to the past 3 weeks. Third one added is MongoDB. Got an upgrade, had a positive reaction to an investor day this week, up 2.7% for the week. And you can see how it's just going sideways since its big earnings gap up. I've read some pretty good stuff on this. Yes, it has a high PE, also pretty decent growth rate. So anything in tech that was up for the week deserves attention, since for the most part, tech stocks were down on the week. And finally, the last one added was something that we bought. Bounced at the 21 today. We're down slightly on this. It was down 4.4% on the week. But basically retracing part of this nice move up that started on 6.2 when some money flowed into cyclicals and a pullback on lighter volume than the up days. As long as today's low holds, we'll try to give this one a shot. Now, the next, the remaining 17 are all uh, holdovers from last week. And if there's a red flag next to it here, that means that we own it in-house. Some of these really down significantly on the week, but didn't break the 21. So that's a testament to how strong they actually were. Unity Software is one. They've got the partnership with Apple for the new Apple virtual reality headset. Also read some other positive things about their products. Palo Alto, the absolute strongest of the software security stocks, just barely down for the week, down 2% today. Chat, this is our AI ETF, down 4% on the week, still above its 21-day moving average. Google, we own this, just down less than 1% on the week. So this is one where just uh, had sold off enough. There's been serious relative weakness on this. Undercut reclaim the 21 inside day today, holding the 21. So some buyers came in when they needed to. Toll, part of the strongest, one of the strongest sectors in the market, that being home builders, up 3.6% on the week. Tesla, down 1.5% on the week, inside week, holding the 80 EMA. Live, we bought this week, right off the 8 EMA, just closed slightly below it today. Inside week down 2.7% on the week, but a very nice setup and great fundamentals. Dynatrace trading extremely tightly right here along the 21 and above that 50 level, down 1.2% on the week. ELF just got mad when we were talking bad about it, I guess, last week. Had a great week, up 4%, did get an upgrade, nice volume. ELF simply will not go away. Celsius, great week, 3.92% up on the week. Pierced that 150 level, big volume today. This is Russell rebalancing, but look at all the blue bars on the weekly. That's massive accumulation for Celsius. Uber, another great stock that had a great week, just barely down on the week, 0.41%. Serious strength and relative strength holding the 8 EMA. Intuitive Surgical, just barely down for the week, holding the 8 EMA. DraftKings, one that almost got punted last week, but had a good week, up 2%, continues to consolidate. Race, just barely down for the week. Tight week relative to its range last week. NVIDIA, down 1.1% on the week. Absolute market leader. Meta, absolute market leader, down up 2.8% on the week, riding the 8 EMA higher. Microsoft, a little bit of a pullback this week, down 2.1%, still riding the 21. And that's it. That's your 21 over 21 list. And with that, we're going to wrap up this video. So as always, we'd like to hear from you. Email don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Key things to watch for next week are the S&P 500 versus its 21 EMA. Note the 21 EMA is now above this little breakout level, which is around the 4,300 level, the 21-day moving average at 4308 right now. So another round number support along with the 21. Always like to see two levels of support when an instrument is pulling back. And then the NASDAQ 100 will continue to monitor for how stretched it is. Getting closer to the 21, only 1.9% above that, still 7.7% above the 50-day moving average. Remember, it's not how much you make in the markets, it's how much of that you can keep. We are diligently managing risk as part of this pullback that was expected. Just because it was expected doesn't mean you throw the baby out with the bathwater. We're pulling the weeds and watering the flowers. And if you'd like this approach, reach out to us, don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Or my partner, Dan Stewart, dan@revereasset.com. And with that, I'll wrap up the week ending June 23rd. This is Don Vandenbord telling it like it is. Thanks for listening and have a great weekend.